people think HMRC finds out about undeclared income because somebody has grassed you up, or because an accountant has made a mistake, or because they get unlucky with a random check. This is not how it works anymore. HMRC has a system right now, as you watch this video, that is cross-referencing bank transactions, property records, vehicle registrations, online sales, holiday lets, crypto activity, your social media, and data from dozens of other sources against what you have declared on your tax return. And it does it automatically for every taxpayer in the UK simultaneously. This system is called Connect. And most business owners have never heard of it. And that's the problem. In this video, I'm going to show you precisely what Connect is, exactly what the data it is pulling, how it decides whether to flag you for an investigation, and what you need to do about it. Because the directors who come through this period of enforcement without a problem are not the ones who have got lucky. They're the ones who have understood the system and ran their affairs accordingly. So stay with me. And if by the end of this video you want someone to look at your specific situation, the link to book a free call with one of my team is in the description. No cost, no obligation. So what's Connect? What is it actually? Let me give you a real picture of what this system is, because the version that most people have heard about does not do it justice at all. Connect was built by HMRC in partnership with BAE, and it launched in 2010, but it has been expanded and upgraded continuously ever since. Now today, 2026, it holds over 55 billion items of data on UK taxpayers. Now to put that into context, 55 billion data points for roughly 67 million people in the UK. That is an average of over 800 data items per person in this country. Now the systems operate by HMRC's Risk and Intelligence Service, and around 4,300 HMRC staff use it daily. It uses predictive analytics, the same type of modelling used in credit scoring, and it's to build a risk profile of every single taxpayer. And here's the number that tells you everything you need to know about how effective it is. In the year 24 to 25, Connect alone helped HMRC recover £4.6 billion in additional tax. And that's up 35% on the year before. So the system generated 540,000 investigation cases in a single year. Now Connect does not wait for a tip off, it doesn't wait for a mistake to be spotted, it actively cross-references data from over 30 external sources. Excuse me, problem with live video. And it looks for anything that basically doesn't add up. Now when it finds a discrepancy, when the picture it can build about your financial life doesn't match what you've declared, it generates a risk score, and the higher your score, the higher up the investigation queue you go. Now HMRC has also recently confirmed a partnership with a major US data analytics company to extend even more sophisticated analytical capabilities across Connect's data. And the system that we're talking about today is not standing still. It's getting better month by month. Now, I want to sort of walk you through exactly why I think I might be a good person to listen to. I'm not here sitting to you from an ivory tower as an insolvency practitioner. I'm not an insolvency practitioner. I run the UK's largest insolvency advisory for directors, and I've actually been through what you're going through now. There was a time many years ago where I had to seek insolvency advice, and I just found that the advice out there was so confusing, it was conflicting, it wasn't really tailored to me as the director, it was all very rushed, very hostile. And out of that, that's why I built Director First. So my job is to help you understand your position, what your options are, the sooner you reach out, generally the better options you've got. And everything that I'm about to show you now is the information I wish I'd have understood before it became relevant to me personally. And I want to be clear about something before we go further. Understanding how HMRC tracks you is not about helping anyone hide anything. These videos are not about avoidance. It's about getting you prepared. Every pound of tax that's genuinely owed should be paid. What this video about is making sure that you're not flagged for things that have a legitimate explanation, and that when you are flagged, as many innocent people will be, you're prepared. And again, if you want to speak to someone about your specific position, you book a call in the description. Now, in a moment, I'm going to take you through the 9 specific data streams Connect is pulling right now. Some of them will not surprise you, some of them will. I want to finish with the one that most business owners and directors are completely unprepared for in 2026. Stay with me. So, what Connect is actually looking at right now in 9 data streams. They're all being cross-referenced against your tax returns every single day. Now, stream 1 is obviously your bank account and payment processes. Connect has got access to data from UK banks, credit card companies. It knows your account balances, your transaction history, and the pattern of money moving in and out. Now, beyond your bank, it also receives data from payment processors like PayPal, Stripe, WorldPay, and others, Apple Pay, Google Pay. Like, under this reporting framework, they've got to report everything to HMRC, okay? It's all required to share data across platforms. Now, if money's moving through your financial accounts in any direction at a level that does not correspond to your declared income, Connect will identify that. Stream 2 is land registry and like property data. So Connect cross-references property ownership data from the land registry against tax returns. It can see every property registered in your name. It can see when you bought it, when you sold it, if you disposed of a property and not declared the capital gain, if you own rental properties and your declared rental income looks low compared to the number of properties you hold, and if the timing of a property purchase does not correspond to a declared income level, Connect will flag it. And it's also cross-referencing data from estate agents and property portals, so it can see properties being actively marketed for rent even before land reg actually appears. Now, stream 3 is the DVLA and vehicle records. Connect can see what vehicles are registered in your name. So if you're driving a vehicle, or you've got multiple vehicles whose value is inconsistent with your declared income, this is a data point in your risk profile. It's not speculation anymore. The system description from a House of Commons committee letter confirmed that Connect identifies hidden relationships across data including lifestyle indicators. A vehicle registered in your name that you could not afford on your declared earnings is exactly the kind of anomaly the system's gonna spot. Now, stream 4 is online marketplaces and selling platforms, and there's loads of people who are doing this as side hustles, okay? But from January 2024, these platforms were legally required to report seller income directly to HMRC. So it's not even optional, it's not a grey area, it's a mandate. So eBay, Etsy, Vinted, Amazon, Facebook Marketplace, they all report the sales that you may have made. If you've sold goods through any of these platforms above the reporting threshold, HMRC's already got the data. It's been matched against your self-assessment return. And if you declared it, it's not a problem. But if you didn't, you're in the system. Now, this catches more people than almost anything else because many sellers genuinely didn't know they had a tax obligation. It's understandable, but it's not a defence. Stream 5, short-term rental platforms. Airbnb, Booking.com have exploded over the last few years. You know, doing serviced accommodation has been a really popular thing. But again, those platforms are required to share incomes paid to the host with HMRC. Every let, every guest, every payment. And if you've had a property on Airbnb and you've not declared that income, HMRC almost certainly already has that data. The question is whether they've matched it to your return yet. Stream 6, crypto transactions. So this is one of the fastest growing areas of enforcement from HMRC, and it's worth spending a moment on it because the scale of activity here is very significant. HMRC already receives data from all the UK crypto exchanges, and it uses that data to cross-reference transactions against declared capital gains. Now, in the year to April 2025, HMRC sent 65,000 nudge letters to crypto holders suspected of undeclaring gains. And that's more than double the number sent the year before. Now, from the 1st of January this year, 2026, there's an agreement called the Crypto Asset Reporting Framework. And it basically gives the revenue automatic access to data on crypto transactions carried out in other jurisdictions. So offshore crypto is no longer hidden from HMRC. And if you hold crypto on an exchange anywhere in the world, that data will go back to HMRC automatically. Now, if you've made gains on crypto, selling, swapping one token for another, using crypto to buy something, and you've not declared those gains, now is the time to address it voluntarily before Connect matches the data and a letter arrives. Stream 7 is the Common Reporting Standard and Overseas Assets. The UK Participant Reporting Standard, and it's an international agreement through which banks and financial institutions over 100 countries automatically share account information with each other's tax authorities. So, if you've got bank accounts, investments or assets overseas, HMRC knows about them, or they will know about them. The data flows automatically now. Offshore doesn't mean hidden. In fact, it's not meant hidden for years. If your overseas financial position has not been declared in full on your self-assessment, this is a vulnerability that only gets more exposed with time. Stream 8, companies, house and business filings. So Connect cross-references your personal tax against your company filings, turnover, profit levels, director remuneration, dividend payments, and the relationship between what the company earns and what you declare personally. Now, in the tax year 25 to 26, HMRC has introduced new requirements for all directors of closed companies, so that's most small limited companies like you and me, to report the company name, registration number, the percentage shareholding on the personal self-assessment return. And this is HMRC building a more granular map of how money flows between companies and the directors. And if your personal tax position does not look consistent with what your company filings show, that inconsistency is going to be visible. Stream 9. There's been loads of people kicking off about this, and it's like social media and open source data. And this has surprised so many people. HMRC has confirmed that Connect monitors publicly available data, including your Instagram, okay? Not private accounts or private messages, but anything that's publicly visible. So a public post about a new car, photos from an expensive holiday that show significant expenditure, an Airbnb listing, a brand new Rolex, a profile on a freelance platform showing work that's not been declared to HMRC. This is all getting logged. And it's using open source data to build lifestyle profiles that are then compared against your declared income. And if what you're publicly showing does not match what you're telling HMRC, that gap is visible to the system. Now, I want to move on to how we think Connect decides to flag you. Because right now, understand what data Connect is looking at, that's helpful, right? But let me tell you how it decides to flag you. Connect doesn't simply look for obvious errors, it looks for something called dynamic benchmarking. And for every taxpayer it builds a profile, so you've got your income level, your sector, your business type, your location. Then they compare your figures against the expected norms for people in your position. Now, if your expense ratio is significantly higher than comparable businesses in your sector, that is a flag. If your profit margin has dropped sharply without a clear economic explanation, that is also a flag. If your personal drawings from the company look inconsistent with your lifestyle, that's a flag. If your VAT returns don't reconcile with what your suppliers and customers have independently filed, that's a flag. And every flag adds to the risk score. And once your risk score crosses a threshold, you go into an investigation list. An HMRC officer reviews the case. If they agree there's something worth looking at, contact's made. And that contact might be a nudge letter, a relatively informal prompt asking you to review your position. It might be an aspect inquiry into a specific line of your return, or it might be a formal opening of a full compliance check. And the level of contact depends on how significant the discrepancy appears and whether HMRC believes the issue is a genuine error or it's something more deliberate. And here's the critical point to understand. By the time that letter lands on your desk, Connect has already built a detailed picture of your financial life. HMRC is not starting from scratch when they contact you. They're asking questions that have already had data to cross-reference against. And this is fundamentally different to an investigation that starts from nothing, which is how it used to be years ago. And that's why how you respond matters so much. So what should you do? If you've heard all of this, what should you actually do next? Well, the first thing and the most important thing, and I can't say it clearly enough, if you genuinely know that there are areas in your declared position that would not stand up to Connect, it's time to address it, not when that letter arrives. Now, for a careless error, disclose voluntarily before HMRC contacts you, the penalty can be reduced to 0. For the same error discovered through Connect and raised by HMRC, the penalty is substantially higher. And for something deemed deliberate, penalties can go up to 100% of the tax owed, plus interest, plus actually the tax that's owed. So the gap between these outcomes is enormous, and it's determined almost entirely by whether you act first. If you've got undeclared rental income, undeclared crypto games, income from online platforms that you haven't reported, or you've got a director's loan account that does not look right, speak to a professional now and begin the process of making that voluntary disclosure. It's not an admission of guilt, it's the most commercially rational decision available to you, given how this system works. And beyond that, keep your records clean and current. Ensure that your salary and dividend structure is properly documented. Reconcile your director's loan account. File on time every time. Treat your digital footprint as part of your tax profile, because guess what? HMRC is already doing that. Now, if you found this video useful and you want to find out more information about how an investigation works, I want you to go over there and watch that video. I interviewed a chap called Salman Almar. He's an ex-HMRC investigator, and he will give you a clear picture of what actually happens behind the scenes. Thanks for your time. Chris Worden, God bless.